What's up, guys? Welcome back to backtesting session with the Moss. Hopefully, you guys are doing great. I am doing great, as you guys know. Let me just see here if I can pull up the chat. I'm gonna pull up the chat here to my left. Um, how are y'all doing, guys? All right. Yo, earlier today, you guys, I don't know if you guys were there on my segment. It was from 12 to 1 p.m. And I think we just got like rated or something. There was like a whole lot of people watching, like 1,300 people, and I really thought I was him. I don't know why I thought it was true, but yeah, I really thought I was him. Unfortunately, I think it was someone just rating with bots, but yeah. Let me just do the announcement on my Twitter and on my Discord right here. So I'll be giving away 250K select accounts. Bro, you're him. What the fuck? Appreciate you. Yeah, but I really thought I was him. Like, let me just do an announcement in my Discord. I'll give away 250K select. If you didn't receive them, you'll receive them. You'll receive them later tonight or tomorrow morning. That's 100% certain. All right. 7 days. Let me just go here and right, Tradeify TV. So did you guys like the format that we did last time? Last time it was nice, I think. Like backtesting one strategy that you guys pick. The last time we did what we did like the power of three one. So we could do anything that you guys want. What do you guys want to backtest today? Actually, we could do the same kind of format as last week, which was we were backtesting the power of three. So looking at the first candle, then trying to predict the new one, the distribution of the 10 to 11 a.m. candle from basically by looking at the 9 to 10 a.m. candle. What do you guys want? So I'll just type one if you guys want to backtest the orb. Okay, so opening range breakout. Type two if you would want an ICT strategy. Okay, basically either the power of three or fair value gap, unfilled fair value gap strategy. And three, what can we do, guys? What is the third thing that we could do? Do you guys have another strategy you guys want me to talk about? Like that actually has substance. Don't tell me the silver bullet. Volume profile. I don't think there's like a good indicator on FX replay. ICT, damn, so popular, man. It's the new. It's mainstream now. Heat map, I don't have it. Oh my god, it's mainstream. It's the new retail. By the way, guys, bare minimum for me to do the 250K select account giveaway, I need um I need 80 likes. All right, so let me just share that on my Twitter. It should bump. Oh shit! I'll just reset that. This one was shit. Wait, the post that I made was just trash. All right, trend line, initial balance. What do you want me to back this with the initial balance? Back this gold. Is this live this very moment? Yeah, yeah, it's live. It's live, absolutely live, bro. Okay. Let me just do the announcement here because if I make an announcement on Twitter, there's like 40 more people that will join, bare minimum. Mm. Okay. All right. You should backtest the bounce and rejection of the 200 EMA on the 5 and 15-minute time frame. Damn, who agrees with that? Type 1 if you want me to do that. Type 2 if you're like, hell no. Because I don't use any indicators, I'm not gonna lie. I purely use price action because I believe that indicators are like laggy. They're like lagging indicators, and it's super easy to like feel like you're making money in backtesting with those laggy indicators. But it's pretty hard to make money in backtesting without them. So, all right, you know what? I think what we should do is exactly the same thing as yesterday. Try to have a read from 10 to 11. All right, this is what we're gonna do. Okay, the thing is with me, you guys know me, I trade the whole day usually, but what we're gonna do today, we're gonna try to have a read from 10 to 11. Okay, sometimes life makes not everyone can trade the PM session. Not everyone can be extremely patient the whole day for a quick scalp, 10, 15 handles, and sometimes life gets in the way. So you know what? Even me, you guys know that. I don't know if I told you, but I definitely want to transition a little bit more towards AM trading. Not necessarily because what I do doesn't work. Not at all. It's just because there's the amount of good trades there are from 10 to 11 or 10 to 11:30 are just amazing. So yeah, guys, I've made lots of money with that. Yeah, I do not doubt that. A lot of people make a lot of money with indicators. I'm not that type of guy. you know all right, so what we're gonna do, this is the open. Let's try to find a trade for the orb first, and then from 10 to 11, so the silver bullet hour, try to get a read and basically play the an ICT model, okay, the power of three. So here, let me just have the 15-minute right there and the 1 minute to my right. Okay, this is what I'm going to do. So the orb is waiting for the first 15-minute candle to print. There's going to be a high and a low. So basically, how I want to catch it, I don't have a lot of knowledge with the orb, so this is why we're doing the session, because I know a lot of people are trading the orb here, and there's basically two ways you can trade it, like three ways. All right, so let's say you form a high and a low. All right, basically what you can do is look at structure, look at time, and if you're breaking highs, you're extremely aggressive, you can enter on a pullback to basically predict that you're going to create a new high to break the opening range high. Okay, that could be one of the scenarios. The second scenario is you create a high and a low, you break the high, you take the retest for a few points back to the upside, so the break and retest. Or the third one would be it breaks, but you do not play the retest, you wait for the flip and you target the bottom of the range. Okay, is this the best thing? I wouldn't play it like that, to be honest. I would wait for it to break, come back, get close. If it does retrace back to us, I would take it. Do you guys agree with me? This is how I would play it, actually. um, I don't see myself playing it in another way. All right, so let's start right now the session. Really hyped for that. The last session was amazing, so definitely hyped for that. All right, so okay, it's May 2025. Well, hopefully this is not going to be garbage action, and hopefully this is going to be pretty good. But let me just put the cam here so you guys can see me pretty well. And that's it. Let's go. Wait, put that here. All right, let's go. If you guys have any questions, make sure to type it in the chat. We're gonna backtest. The first trade we're gonna take is orb. Then the second trade will be ICT. So everyone is gonna be happy with it. All right. So here, okay, first 15-minute candle prints aggressively above this buy side liquidity, which is 289. Okay, this resistance level. This 15-minute candle will close bullish. It's 43, closing in 1 minute. There is a potential play that we can catch, predicting that price will open up higher to break the opening range high. In this exact scenario, I actually like it. You know what? I actually like it. So I'll buy here. I'll have like a little bit more than a 1-to-1. I'll have a 1-to-1 restore here. Do you guys agree with this entry right here? A lot of rejection from 96. It's 43. We have a lot of chances of opening up higher to sweep the opening range high. Do you guys like this trade, or you would prefer another confirmation of a break here? I think this would put us in a bad risk to reward scenario. I would want to predict that rather than wait for extra confirmations. Let's see what it does here. Okay, so 44 candle pushes up. That's not bad. Okay, 45 is an open low. Okay, so here you see new candle opened up, starting to get aggressive to the upside. This is the moment where I would still be looking at ES actually. All right, failure. Wait, do I have ES here? No, I only have NQ. ES would be a big part of that edge, I would say. Looking at those SMTs, so looking at if ES swept that 15-minute candles high or not, would definitely be a big part. So that would be one failure for the opening range breakout. Okay, prediction. So let's see here what happens. This is the low of the opening range. What are those candles? This looks like a bank holiday, no? I've never seen those candles on NQ. It looks so bad. This is definitely like a half day or bank holiday. What is this? These are not normal candles. Are these normal candles? Yeah, I fucking knew it. This is not normal candles. This was a half day. Definitely like some sort of bank holidays or something. All right, let's go next. I can see it just by how the candle actually looks like. All right, so let's go here. Let's wait for the first 15 minutes to open. All right, 42, 43. Okay, this is the high. This is the low of the opening range. So in this case, to be honest, what I would want to play, if we re-break, show aggression from those sellers, the short play would be nice. If we break above 67, the longs would be cool. All right, right here. Right here, the longs do not look bad at all. Okay, so here we are in longs. We got closer to the high than the low of the opening range. So in this case, I'll try a long to predict a breakout of the 930 open. Okay, pulls back above. Good reaction right here. Nice push. Right here we broke out of that opening range high. So we could take off some profits, go break even, and let the rest run back towards the 921 high. Let's do this. Hopefully, this has a lot of liquidity in it. I would definitely see us. I see us coming back towards our break even. Maybe we find some aggression. That's the thing though. That's the thing with trading during the AM session only. You're gonna have moves like that. You're not gonna find those kind of moves in the PM session. Let me tell you one thing. If you put your stop loss to break even in the PM session, your stop loss is gonna get hit. All right, but in the AM session, um, you can catch bigger moves. All right, I don't know if you guys agree. Definitely those kind of plays, you won't be able to catch them during the PM session. So this was the play, opening range breakout. Let me show you exactly what happened inside my mind. So what you want to do is wait for us to get closer to either the high or the low, and then along with structure. So let's say here we formed some sort of inside bar candle. We formed the high, we formed the low, and then we were trading here. All right. So I want to find some sort of breaks either to the downside to short, predicting that we're going to sweep the opening range low, or wait for us to break highs, okay, get closer to the high, and then predict that the opening range high will get taken out. Okay, that is the play that I would want to take here. Let's say. Yeah, that's true though. PM is better for beginners, yeah. But I would say like candlestick pattern wise, there's so many fake outs in PM. Like candlestick patterns have more meaning in the AM session than the PM session. 100%. 100%. All right, let's say ICT now. We are looking for an ICT trade 10 to 11. So the first hourly candle closed bullish as a reversal. So now we'd expect the next candle to print bullish also. Let's see if we can find any good potential retracements or any good trades here inside this range. Pushing above the high. All right. We have an unfiltered value gap right below us, sweeping buy side. So this could become the drawn liquidity. I definitely know it. So how how do you want to play this? Two ways. Okay. Now you know that hourly candle wise, you are bullish. Okay? You are bullish because you're using the previous candle as why you need to be bullish and why you should expect the next candle to close bullish. This is basically what we're doing with the power of three. So previous candle closed bullish, you would expect the next one to also close bullish, okay, until proven otherwise. You don't want to reverse the market. If you're predicting a reversal candle, it only happens 30-35% of the time. So you will get caught up shorting a bullish market. So let's say here in this case, looking at the previous candle, this candle is bullish. I would want to see a bullish candle close here. Every single down moves from this candle, okay, as soon as it opens, I would consider them being fake outs, and those shifts in market structure, I wouldn't consider them being real shifts. I would want to retarget internal highs. So the thing that structure is telling me here, let's say on the 15-minute chart, is that we have a liquidity pool here sitting at 360. We have an unfilled for value gap right below us. Unfilled gaps means that you display so aggressively to the upside that this area has low volume. And if an area has low volume, you have a lot of chances of seeing it. So two ways you can play it. You can wait. Okay, you can, like, short-term wise, you're bearish because of that gap, but you could long if you inverse this bearish for value gap here because of the power of three. Do you guys agree with the overall analysis that I just did? We have an unfilled gap right below us. This would become the next drawn liquidity if we find some sellers inside this market structure shift. Selling here, though, is extremely aggressive in my opinion, time-wise and also structure-wise. So waiting for an extra confirmation, a second break, waiting for this shift to hold, re-break, and then enter on the order block would be a better play because it will be a lower risk to reward play, basically. So hold, pushes up at 39, not bad. So here, inverse that bullish for value gap. You could wait for some sort of retracements, enter longs because of the power of three scenario. Okay, so let's go for that kind of play here. Okay, so we got filled here inside this inverse. Really good reaction so far. and I'll explain to y'all the reason why I took it. This could be a good break-even area, and also back at a 1-to-1, you could take out some profits, in my opinion. So here wouldn't be a bad 1-to-1 risk to reward. Yo, ferme là. Yo, stop. Wait, I'm talking with my fucking cam. I'm retarded. Oh my god. Am I? Oh, my NVIDIA broadcast is. Oh my days. Wait, 2 seconds. 2 seconds, 2 seconds. Yeah, it's connected to my freaking. It wasn't connected to my mic. Oh my god. This does that like sometimes, but oh my days. Alright, now you guys should be able to hear me better. Did you guys hear me like oh my god. Alright, let's just not talk about it. Let's just move on. Alright. So now do you guys hear me better right now? Just let me know. So here, inversion for value gap play, back to the upside. Let's see if we can. Your sound was good enough. Okay. All right. Let's see if we can go break even back after sweeping this internal high. Oh my god. Okay, we're getting squeezed. Pushing back up. All right. This is not the best scenario right here. Okay. Nice breakout. We're already at a 1-to-1 risk to reward. This is a moment where I would want to take out some profits. So reasoning for that trade. All right, let's go back here, rewind, and let's see the reason why I took this trade and how can I replicate that trade in the long run, knowing that this happens every single day. Okay. First thing I'm doing, playing the power of 3. What is my rule? My rule is I never try to fade what the previous candle told me. Okay, so if the 9 a.m. candle that closes at 9:59 and 59 seconds, okay, so the 9 a.m. H1 candle closes bullish, okay, you'll remain bullish for the 10 a.m. to the 10 to 11 a.m. candle on the H1. Okay, so you are remaining bullish. Okay, so here you see 9 a.m. candle printed bullish above the opening price. Buyers are the one in control. This candle is distributing to the upside, so you're predicting that the 10 a.m. candle will also close bullish. Okay, so if it closes bullish right here, if you think that candle will close bullish and every single candle has an open, high, low, and close, then you expect that every single down move is just a fake out to generate sellers to then see price going back to the upside and sweeping the most recent high. Okay, basically how does a bullish candle work? Okay, we're not trying to catch like the whole bullish H1 candle. Okay, this is not what we're trying to do. We are trying to catch bullish retracement from a future bullish candle. So let's say this is a bullish candle. What will happen during that is that the candle will open, go lower first, flip above the opening price, displace from here. Okay, it will accept. So here, if we have a shift in market structure here, or if we have a certain sweep, I do not consider that being a real market structure shift. I consider that being a fake out and just a retracement for that bullish candle to basically grab some buyers to then go back to the upside and keep printing bullish. Yes, there is giveaways, by the way. I only need 80 likes. How many likes do we have? We have 35. Come on, guys. Hell is that? Man, Lao King. 35 likes, man. For 250k select. That's a joke. All right. So basically, that's pretty much the strategy here. The power of 3. So you're looking at the 9 a.m. candle that closes at 9:59 to give you the bias from the next candle. Okay. So here, 9 a.m. candle printed bullish. I am bullish from the 10 to 11 a.m. candle. Okay. So here, what happened? We went back down, created that fake market structure shift. This is how I call it. And as soon as that market structure shift do not hold, you fade it. So let's say here high, low, higher high, lower low. A lot of people just short those 1 minute market structure shift, thinking that a candlestick pattern on the 1 minute will be the reason why price basically will go back down towards 22 here. Okay, which is you need to find a system that gives you a framework and a reason behind why price should expand on the higher time frame before even looking at the 1 minute chart. Okay, so let's say here in this case, what happened, you are bullish because of the 9 a.m. candle. This was your rule. You shifted to the downside. What you're doing is that you do not want to enter shorts. You want to enter longs because you're predicting that this candle will close bullish. You just wait for this market structure shift to get squeezed. Okay, you wait for buyers to stand up inside this market structure shift. You hold, you long basically, and you take out some profits at a 1-to-1. Let the rest run. Okay, so here, really good area to take out some profits. Stop loss back at break even. You would want to see this high act as buy stops in order to run higher. Let's see what it does. Immediately stops you back down. Okay. Is there a potential short opportunity you can take from this 15 though? Okay, we already took our trade, so see how that candle closed bullish, distributed to the upside. This is what I want to see. Hope I win. I just got scammed. Okay. I can't say that. Oh my god. I actually can't say that. Chill, 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 chill. You try to bait me there, bro. I can't say any other names. I am Rep and Tradeify. Alright? Stop trying to bro try to bait me into saying another prop firm's name. Bro, chill, bruh. Oh my god. I'm trolling, bro. I'm trolling. Alright, so this was the trade that I took. Really good. Let's go to the next day open. Yeah, so smash that like button. We are at around what? 53. We still need at least 29 more likes. 53, 27. Alright. When do you plan to open the mentorship or VIP again? Not gonna lie. Not in a long time, bro. Alright. So we're doing a backtesting session for the new people who joined. We're backtesting the opening range breakout as our first trade opportunity of the day. And then we're looking at the power of 3 from 10 to 11 a.m. to predict a second play, a scalp play. So why do I believe that scalping is really important? It's because I truly don't think there is a high risk toward trade that you can take every single day, because the market is not giving you good opportunities all the time. The market is not going to expand for 100, 150 handles all the time. Sometimes price just stays inside a range, and it doesn't give you a big expansion. So knowing how to scalp when you can recognize that the day is not going to give you a good high probability bigger picture play is really important. Okay, I generally think that if you can scalp, you're more versatile. You can adapt to a lot of market conditions, a lot of the market conditions that are going to be more choppy, less volatile. So knowing how to scalp is extremely important. So no, even if you're not trading the strategies that I'm showing, or you have a completely different strategy, I think being able to have that kind of adaptation in your system or in your playbook is really important. Okay, so not every single day will give you a 200 handle distribution. Okay, from 10 to 11. Okay, so here this is the high and the low of the opening range. So if we get close to that low and we break, I would be interested in shorting the market back down towards this most recent low here. And if price holds there, breaks close to that opening range high, I would want to long that. Okay. Okay, we were breaking below, creating that breaker right here. Let me pull out my fib. Just pull out my fib here. All right, let's try to enter here inside this breaker 2 contracts and let some more run back for 1 to 2 here. Really clean trade. We are getting breaks of structures back to the most recent low, which is a 930 low here, which is the opening range low. If we can see this order block hold, not see any pressure back to the upside, we should create new lows back towards the opening range low and use this hopefully as our as stops in order to see more downside. So let's see. This is the thing though. If you're trading between 10 to 11, this kind of thing is always going to happen. Oh my days. This is always going to happen. And on NQ, if you're not in, this is one thing. Sloppy entries on NQ are not that sloppy. Are less sloppy than you think. Damn. But you see here, the read on the opening range breakout, you're taking the trade when you're the closest to either the high or the low and you broke. Okay, you broke structure. So let's see here, no trades. Let's just wait for that hourly candle to close and give us the bias for the next one. Okay, good. All right, so this hourly candle from 9 to 9:59 and 59 seconds closed bearish. What does that mean? We broke out of a certain range, coming back inside the range here. So I would expect the next candle to be bearish, okay? I would expect us to trade back towards the previous candle's low. So the thing is here is that if you are predicting that this candle from 10 to 11 will flip back bullish, sweep the previous candle's low, close back inside the range bullish, you only have 30 to 35% chance of winning, okay? So what we're going to do here is that we're going to treat bullish market structure shifts as fake outs, okay? So if we shift here on the 1, we're going to use them as fake outs. Even if they hold, we're not in shorts yet, okay? We're going to wait for 1 to appear and wait for it to get squeezed inside the range, so we will short back towards the most recent low, predicting that the next candle will close bearish. So let's see what the market has for us here. Okay, so here you see we're shifting back on the 1. My overall thesis is that this candle will close back bearish. Okay, so here we have a 1 minute bullish for value gap. If we're truly bullish, we should hold this in order to create new highs. If we're bearish though, we will disrespect it, and I could find a potential scalp back down towards the most recent low for a 1-to-1. Amos, before you started trading for a day, do you look at the previous day's close, or would you just look at the present market condition and take your trades? Everything is subjective, you know. Everything is subjective depending on your view of the market, your system, your risk to reward, your levels, you know. So let's say the market moves for me because of certain conditions that meet my edge. That could be totally different from yours. Basically, I do mark out the previous days. Like, I see the previous day's close, I see the previous daily high, previous daily low, weekly high, weekly low. I see them. I know there are levels that could potentially act against me or with me, you know. But usually I truly look at, did the candle close bullish, did it close bearish, and how should the next candle expand, and where could buyers could potentially get faked out. I like when market participants are faked out and are absolutely squeezed inside the range, because those kind of trades are the fast trades. Okay, when you're a scalper, you want to be right quick, you want to be wrong quick. So let's say here in this case for me, okay, let's say I predict that this candle here will close bearish. If we disrespect this gap, okay, and I take this as a fake market structure shift, okay, I judge that being a fake market structure shift, what will happen is that we're going to head back down towards the most recent low. Okay, so Why? Because I predict that the next candle will close bearish because of how that 9 to 10 a.m. candle closed. Okay, so here, what's the distribution of that candle? It's like this. So it opened up, went higher a little bit, back towards 87, went back down, traded here, okay, at 33, and now it's pulling back up. It's still bearish. This candle is still red. Okay, I don't want to fade who's actually in control of the market. So now, if I see, now I can scale down to the 1 minute chart and see who's in control of the market. On the 1 minute chart, the buyers are the one controlling the market, but on the higher time frame, I would expect that candle to close bearish. So now I could fade those buyers. I want them to get squeezed. Okay, and it doesn't mean that, let's say, if this trade fails, that my overall analysis will fail me over the long run. So let's say here, really good displacement. We got the inversion for value gap at 43. Not a bad play. This is not a bad play at all to take shorts from. So let's say here we short. Basically, we can do here, we could have bigger targets. We could target that range low here, that 5 a.m. low, which is the London low. But we could definitely trim some profits back at the most recent. Okay, so here we inverse that bullish for value gap. Those buyers are being squeezed. Fake market structure shift for me. If you always try to reverse the market right here on the first market structure shift, you're most likely gonna get squeezed in the long run, basically. Okay, so even if it fails, and we're moving on. Okay, tap back inside the inversion for value gap, not bad. The thing is, right here, I don't have ES to my left. I didn't start something with ES, so looking at ES and NQ at the same time will give you a more accurate win rate. Okay, you see here that kind of rejection. Exactly here would be a moment where I would look for SMTs. Is ES sweeping this low, this 1038 low? If yes, I would be out. Okay, big accumulation, 1054 here. Let's see. What is that? Okay, boom. So we get TP1. Now I could go break even and pray. You see, like, this is basically the thing with high risk to reward. It's only about risk management. Do I truly know the expected value of me entering a short right here and it going back down for, let's say here in this scenario, 40 handles back towards the London low? No, because it's subjective. I don't have the real stats of that exact trade because it's never the same exact scenario. You know what I mean? This is like more of a discretionary trade. So letting runners run is a question of risk management. So let's see. Runners never run, Briv. Alright, so this was the trade. Not a, my stop loss was bigger than that in the beginning, but yeah. So this was the first one-to-one risk reward trade that I took. I had some runners back towards the London low. Unfortunately, as soon as it swept it, went back to the upside. Okay. One thing also that I want to say here, and something that backtesting will make you realize in a sense, is how choppy the price action actually is. You know, a lot of people will, let's say a day will end and they will be like, damn, price action was ass, it sucked. Man, it sucks way more than you actually think. If you go in and do your homework, holy shit, if it freaking chops so much. It goes close to a low, pulls back up, creates equal highs, creates equal low. Like, price action will do whatever the hell it wants to do in a day or in a span of an hour. Okay? So you're setting real expectations regarding your edge, and you know exactly what how much you should make in a month, how much you should make in a year, how much you should make in a quarter, rather than just getting stopped out to break even and being mad and blaming yourself from let's say for taking this break even. This reminds me of many ones I had last year. But you see here, like, if you have a high risk to reward, even if it's the best play overall, Okay, let's say higher risk reward. Of course, you're risking less than what you're gonna make. All right, but look at what price is doing. Like if you had your stop loss being right here, even if you have the right framework overall, you're basing your trade off of the fact that okay, look, the framework got respected here. 9 a.m. candle closed bearish, 10 a.m. candle closed bearish also. There was 10 to 15, 20 points to grab here inside this range. Why are you not content with 10, 15, 20 points? It's not about how many points you're making, it's about how consistent you can be and how replicable your trades are in the long run. Okay, so let's see here, how much did I grab? I grabbed like 19 to 20 points. It's enough. Because if I want to start scaling up in a year and a half, I'll just answer with 5 minis instead of 2 or 1. You see? 1 hour OB. You see? Okay. Corb, that's a good thing you said. For me, like the levels that we're rejecting off of are so subjective. What do you guys think about that? Of course it's an OB, but how many times did you see a low, like let's say this order block get absolutely ran through and get absolutely smoked and disrespected? I've seen that so many times. How can you differentiate if you can long from here or short from here? What's the framework? You know, levels, like level trading is so hard because it's subjective. Every level is different, you know? What do you mean exactly, Amar Fast? Easy to talk afterwards, but hell a different game when you have money on the line. From which where are you coming from exactly? I just wanna know. But I totally agree with you. Totally agree. Rank you when you see profits run away. Yeah, yeah, that's the thing. It's either this is the trade-off that you have to work with. Let's say when you're trading with low risk reward, do you want consistency or do you want to flip your account? That's really it, because you can't have both all the time. Do you want to be consistent and make consistently $200 to $400, let's say 3 4 times in a week, sometimes only one, sometimes only two, because you're gonna have losers? Or do you want days where you're gonna make hella money, you're gonna make 2 3K, but sometimes you're gonna have to deal with bigger losing streaks, a little bit more discretion in your system, a little bit more doubts, a little bit more subjectivity. So a lot of things go in play when you trade high risk reward. Okay. So let's see here. Let's go to the next day open. Right now it's we're doing pretty good in that backtesting session. I didn't start a new one though. I just took like one random one that I had. That's what the fifth. Let's do the 15. Let's do the orb trade first, and then let's do the ICT one. Okay. All right. First two candles dropping back down. All right. So that's the first 15-minute bar from high to low. This is a lot of aggression from those sellers right here. Okay. So there's two ways we can play it right here. It's either we're predicting that this order block will hold in order to create a new low. This, if we don't enter here on a limit order, we have a lot of chances of not being picked up in this trade, okay, for the opening range breakout. Second way we can play it, we wait for the retrace, maybe it shifts here, wait for other confirmations of breaks, we enter, and then we try to snipe that low. Will that happen? Maybe it will run without us. Or maybe this candle right here pushes up, aggressively comes to the upside, and gets closer to that high right here, so we could long back to the upside. So there is the fake out kind of scenario that could happen here, and I know it. So this is basically what's going on inside my mind when I see this kind of scenario. I mean, making and following a framework is what many of us are missing. When money on the line, we forget rules plus market plays dirty games. I will start backtesting more. Damn. Hell yeah. Can we get some W's Amar fast? That's that's exactly what I want. Because the framework is exactly what's going to keep you mentally sane. It's the hard proof behind why you should keep trading that system. It's the confidence, not the ego. It's the data, not the yapping. You know, if true confidence is earned through data and through hard proof and um, actual pictures of you being able to replicate that trade in the long run. It's so easy to get caught up in his emotions when you're trading something extremely subjective with a lot of discretion. It's so easy. And, you know, who wouldn't be triggered after 3-4 day losing streak, let's say a 3-4 day losing streak, when you don't have a framework that tells you that you have true edge? It's hard. Okay, so right here, 44 candle push down. What is most likely going to happen? 45 is going to push. Exactly. So here already broke. Was there really a way that I could, take a trade inside this range? Not really. It was pretty hard. So now I would need an ICT trade to show up. Okay, so now hourly candle right here from 9 to 10 closed bearish. Do I want to reverse the market from the 10 to 11 a.m.? No. Okay, of course it could happen. If it happens in front of me, I'll look at it, but I will not take trades. And I would judge that once we sweep this 84, we will generate sellers first in the market, squeeze them, shift back above the opening price, and if we fail to accept higher prices, this is where I'll short back down towards the low of the range. Fake market structure shift. Here, right here, exactly where I would expect us to generate sellers. A lot of sellers are going to be selling below that low, being greedy, being thinking that price will sell off. It could, and if it sells off, then it sells off without us. Okay, and it will do that a lot of times. I'm not gonna lie. On NQ, the market could be bearish a lot. Okay, here, that's not bad. That is not bad. All right. So what is happening here is not bad. It's kind of I would say it's kind of scuffed. We could see like a bigger spike up here. But what is happening here is we're still respecting that bearish distribution. We are seeing that 9 a.m. candle closing bearish. So from 9 to 9:59, I would assume that we will remain bearish and we will close bearish from that 10 to 11 a.m. candle. So every single bullish market structure shift, I do not take them long. I wait for them to get squeezed for me to go back down and look for a short play to the bottom of the range, basically. Okay, basically predicting that the fluctuation of that candle, every single push up that may seem like a bullish market structure shift and look like a reversal, may just be a fake out. Okay, here we're pulling back down towards 34. What is it? 94 here. We created that bullish market structure shift, created that bullish for value gap. If we were truly bullish, we should have respected that gap in order to create new highs. Right here, we disrespected it using the inversion as our framework to see the most recent low. We could sell right here, have quite a tight stop on that one. Let's use a tight stop on that one because the range is kind of scuffed. I like when we have more structure. I like when we shift with bigger displacement than that, generating more buyers inside this range, more sellers also. This doesn't look like a convincing move, I'm not gonna lie. Just using pure discretion here, but we'll see what will happen inside this range. No! Nah, this is lame. Oh my god. Oh my god. Okay, so here I can't answer here. But this is still like the framework got respected. It's just I was being a dick for a tick here. But in reality, did I grab my 1-to-1? Was I able to scalp 10 to 15 handles in the futures market that day? Yes. with a framework that I can repeat in the long run? Yes, I was. Used bullish market structure shifts as fake outs in order to see some downside when they're getting squeezed. Okay, how did I come up with that? This is a good, let's say, like right now I just saw your thing, Amar. How can I come up with that? All right, so basically what I did in the past was that I backtested a model called the silver bullet. Okay, so a silver bullet, what is this? The silver bullet states that from 10 to 11 a.m., you'll have a fair value gap that will deliver 10 to 15 handles every single day, okay, on ES or NQ. Good. Okay, this is just, subjective. How am I going to enter on that? I don't know. But what I did in my backtesting was that I tried something and I got absolutely smoked. What did I try to do, basically? I tried to enter on a 2022 model paired with a fair value gap, and I think the main mistake that a lot of people are doing is trying to reverse the market when the market is overall bearish. So let's say here in this case, what I was doing, let's say the market created this, went down. I would wait for the first market structure shift paired with a fair value gap, enter longs here, and try to grab my 1-to-1 10 to 15 handles. Yes, risk to reward wise, just playing off of the risk to reward, you will see, let's say 55, potentially 60% win rate if you have like a 0.8 risk to reward or 1-to-1 risk to reward. Okay. But what would happen most of the time, which had a higher strike rate, is when I would get squeezed and price was getting below here, and I was thinking about getting the hell out of that position, the small pullback here gave you a good entry back towards the most recent low. When I saw this shift fail, my stop loss was getting hit 90% of the time. So by reverse, basically, how do we say that? Reverse engineer. By reverse engineering a bad strategy, you can find a good one. Okay, so let's say price goes down. If you take the first shift in market structure, of course it could hold, but don't feel FOMO about this not basically this holding and this going back to the upside for 100 handles. You only were able to read the 1 minute chart, and everyone can do that. But the 1 minute chart is usually just a reflection of price at its fair value. Okay, so when price is entering this market structure shift, it's already at its fair value. It can do whatever it wants. The higher time frame candle will tell you if price will go down or will go up, or what are the odds of us going back down towards that most recent low using a certain framework that you can measure in the long run by using backtesting. But here in this case, a lot of people are just going to be able to recognize that shift in market structure on the 1 minute chart and be like, damn. They will hesitate because they got squeezed 4 times the previous week, and then when price is going to hold, they're going to be like, damn, I should have entered, should have, could have, would have, but in reality, you don't have a framework. You just know a candlestick pattern. A reversal pattern will always be either a breaker, either an order block, or either an inversion of 180. Okay, and knowing this will not get you nowhere, just by the way. It will just give you a good story of what's currently happening, but not what's going to happen. So let's say here, good short. Unfortunately, like I didn't get picked up. I was being literally my limit order was at 19, and it picked up 18.5. So can I consider that being a win in my backtesting? Of course, I could. Let's say take that in a picture, put it in a folder, and be like, all right, when we created that shift in market structure, that bullish one, and we inverse that gap, I got in shorts and it worked out in my favor. Good. And there is going to be market conditions, guys, which that fair value gap will get disrespected. You'll short there and it will be the low of day and it will push back up and this candle will flip back bullish and you will have the wrong bias. You will be out. Literally, you will not be able to have a read of the market. And this is normal. This is what backtesting will teach you, is that sometimes you will never make money in this market. You will just trade to survive and trade again and again the same exact strategy and pray that the market meets with your edge at a certain point. How does this affect the live cattle market? What is that? Can you repeat that in Fortnite terms or like NBA terms? Another shift in market structure. This one looks more convincing. Let's see if this one holds. A lot of chop. Pushes up, holds, then flips back to the upside. Nothing to do there. The trade was here. You could have caught 10 to 15 handles in the futures market from this to there. Easy 34 handles. Next day open. Let's do the next day open right here. We're getting close to the end here, guys. So make sure to like this stream, subscribe to the channel. We have 72 likes. I need 80 likes. So do whatever the hell you need to do in order for it to reach 80 likes. You share that stream to your sister, your mom, your grandfather, anyone. But I need to see 80 likes for me to give away 2 50K select accounts. Bare minimum. That's bare minimum. And that's the bare minimum. 80 likes. Come on. Wait, let me see. Is there any questions regarding that? Like, let's say the overall like rules. And this doesn't have to be the same rules as me. You know, this is just like the rules that I'm showing right now. Like, there's way more rules you can add. There's way more scenarios you could potentially be able to adapt to. Right, so now it's 9:45. Let me see the first 15-minute candle. You see here, like, those kind of plays, they're impossible to take. You create a high, you create a low, but you trade so close to that low the whole time that the only way you could have potentially caught that is if you predicted like 5 minutes before, which is almost impossible to do it, you know? 80 likes, let's go. All right, let me just do one more scenario and we're gonna be good. So let's wait for that first hourly candle to print. And then we're gonna be good. Hourly candle closed bearish. Good. We're opening up higher right now. We're pushing to the upside. So this is not bad. A bearish market structure shift. So here, let's say it's a different scenario than the other one. Usually what will happen is that we trade below the slow to generate sellers. And then when those generated sellers get squeezed, we have buyers coming in. And then when those buyers, let's say, get squeezed, this is where we short, because the shorts got squeezed, the buyers got squeezed, and now the shorts are in play again. Okay, so like, let's say double squeeze inside this range. But let's see here, we didn't sweep that low here. So basically I would act the same. I would basically trade the same, but with a bullish order block. I would see that bullish order block being a fake order block, so a fake out to generate buyers. And once we squeeze them, I would try to grab my points back down to see the most recent low. Let's see here. Opens up, goes higher. Let's see. Okay, right now we went all the way back to the upside, sweeping the previous range. Okay, which is, you see here, I was wrong about the bias. I'm still not wrong, let's say, but price did not do what it usually does, which is go back down, pull back up, shift, fake out, and then go back down, which is exactly what I would want to enter on. What happened right here, we opened up higher. Did we shift to the downside, creating a bearish breaker block? No, never. So even if this candle ends up printing back towards 88, I never got faked out inside this range. You know, even if I'm out, let's say I don't have the right bias, I need to see the right confirmations for me to go and enter in a good trade. So let's wait. Okay, now I could just enter off of a scalp model, which would be an inversion model based on the unfilled fair value gap. So this would be like just another way to scalp. I have a high here, which is the 930 high, RTH high. We're sweeping it. This candle is closing back inside the range, showing me that sellers are in control. We have an unfilled fair value gap right below us on the 15-minute chart. What does that mean? This area has a low volume. So the market hates those areas with low volume. It needs to find fair value and rebalance towards that zone as soon as possible. So is there any reason why I should enter shorts here? Yes, we have a bullish value gap being created. If we're truly bullish, we should create new highs. If we're bearish though, we will disrespect it, create new lows. So here I could potentially enter shorts back here, predicting that we're going to see this bearish, this bullish 15-minute fair value gap. Let's see here. This is not a bad play either way. I could target the bottom of the gap. Pulls back up, holds. This is not bad. This is exactly what I want to see. We kind of created that change in the state of delivery on the 5-minute chart. I want to see us flushing back towards this low. Okay. So let's say, where's my 1-to-1 here? I would put my stop loss to break even at this internal low. 1-to-1 would be here. So this is a good area to take out my profits. Okay. For me to be able to replicate that trade in the long run and let it run for 1.8 right after. So let's see. Okay, that would be break even and also 1-to-1 reached. So I would take out most of my profits right here at a 1-to-1, exactly at that line. Spikes back up. So unfortunate, but you see how choppy price is? Like, price will not deliver a 1-to-3 or let's say 1-to-2 without pulling back towards your break even like 15 times, you know. But yeah, so how many likes do we have right now? 82. Come on. All right, so we're gonna do the same thing as we usually do, the number thing. So I'm gonna tell you guys to type a number from a certain amount. I'm gonna DM Nick S before, so you guys don't say it's a scam. All right. So I'm gonna DM Nick S on Discord. All right. I'm gonna DM Nick S on Discord. Let me just find him. Crowd. All right. So I'll type the number that I have in mind. Okay, and I'll wait for it to flip from 6:06 to 6:07 p.m. Okay, perfect. So the number will be, that is a good way to do it. So the number will be from this to that trench. Okay, 300 to 400. Good luck, have fun. You can't, if I see you spam more than 3, you're cooked. I'm not taking you. Okay, go. Oh my, 367. Corb trades. Congrats. Congrats, 367 on God. And you guys, believe me or not, all right, I'm gonna go on Discord right now. So the first winner is Corb Trades. Let me just show y'all the proof. It's 6:07 p.m. I sent the DM to Nick at what is it? I sent it at 6:06 p.m. Okay, just so you guys are sure that I'm not gonna be bullshitting. You see here, 367 at 6:06 p.m. It's 6:08. Okay, so Corb Trades win the first. Okay, then now we're gonna do another number. I'm just gonna wait for it to turn 6:09, and that should be good. Let me wait for it to be 6:09. You almost said it before him. I saw it, bro. That was unlucky. That was unlucky, bro. Oh my. All right. So 6:09. Perfect. So now the number will be from, good luck, 400 to 500. Good luck for a 50K select account. Get a luck. Hell no, nobody has it. Or my eyes are starting to tweak out. Oh god. Nobody has it. Oh my days. All right. Donna H with 439. 439. If you guys want to be sure of that, right here, 439. This message was written at 6:08 p.m. and it's currently 6:10. Calma, calma. The I found a way to calm down the rigged allegations. I found a way. Finally, god damn. All right. So this was it, guys. Hopefully, you guys enjoyed. It was a beautiful session. We talked about the importance of having a framework, the importance of believing in your system, believing in your edge, having true confidence backed with data rather than ego backed by convincing yourself with lies. Really important to backtest, in my opinion. Even if you are a forward test guy and you can't take backtesting seriously, just try to add some just try to have the same framework every single day, even if you use some subjectivity and you use some discretion in your system. Just have the same exact view of the market every single day, and this is how to reach profitability, in my opinion. So I appreciate you guys so much for this beautiful session. Like all the time, we will do a session tomorrow, which is exactly my segment from 12 to 1 p.m. I'll be live trading right there. I'll also be live trading from 9:15 to 11 on Wednesday, and then it will be my normal segment every single day from 12 to 1 p.m., which I'm on an absolute heater. I don't want to jinx myself, but in the last few weeks, I didn't lose too much money on Tradeify TV. I'm not gonna lie, mostly one trade a day. So appreciate you guys so much, and much love again for all the viewers and all the people who are showing up in a backtesting session. I know it's boring, but you know those if you don't make any shortcuts, you will not regret. You will never regret backtesting time. I would say like most of the time that I spent in backtesting was just finding out that the system that I was trading in the past sucked and I couldn't make money with it. You know, so that is scary though. That is actually scary. But I appreciate you guys so much, and I see you guys tomorrow at 12 p.m. EST. Much love, guys.